What's going on, everybody? Stas here. Welcome back to another video. So today we're going to be breaking down the top 12 breakout stocks that I'm looking to buy this week in the stock market. And I want to share with you guys what happened last week in the stock market, doing a quick refresher, breaking down some technicals here on the S&P 500. And we're also going to talk about where my head is at right now as a trader, as an investor, because guys, let's be honest, we're living in some pretty crazy times overall. So hit that like button for me, subscribe to the channel, and make sure to join the free Strive Smart Discord chat and Facebook group, link down below. You could also get 4 free stocks from WeBull, which runs out here at the end of November, valued up to $1,600. All you have to do is deposit $100 using that link, and you get yourself 4 free stocks. So let's get into it. Starting off here with the S&P 500, going over what happened last week very quickly. And honestly, not just last week, but the week before that, we've been seeing some consolidation, and I don't want to say this is the top of the markets, but we've generally been seeing kind of a top-ish, right? A top formation here, struggling under resistance levels, right? And we've just been consolidating for the past, week and a half here, ever since Pfizer came out with that news of the V-shot, right? The markets have been a bit toppy, right? And again, not saying that we're going to crash from here. We very well could go higher. All I'm saying is we're consolidating, right? That news from Pfizer came out. We hit an all-time high at 36.45. The market sold off from there to about 35.10. We double bottomed the week before last week. We broke out heading into last week, right? And then last week, we ended up seeing another top right around that all-time high at about 36.25, a little bit under the all-time high, right? 20 points under. And we struggled under 36.25, 36.30 for pretty much all of last week, right? Here on the 16th, 17th, 18th, and then heading into the 19th is when we took that big sell-off. We broke the high from the previous week, or one of the highs from the previous week, at about 35.85 rather. We broke that. We ended up downtrending from that Wednesday that we broke 35.85 into Thursday, and then into Friday, which if I pull up this intraday chart, you guys can see all of Friday was pretty much a sell-off, and then we ended up tanking in the end of the day, down a good 20 points in literally the span of 10 to 15 minutes. So overall, again, I'm not saying the market's topping here, but we're seeing a bit of consolidation at this all-time high and a little bit of a sell-off from there, and it makes sense because the markets have gone up extraordinarily in the past 2-3 weeks. Guys, take a look here. When November started, we literally have gone up on the S&P 500 from 32.30 all the way up to 36.45, which is a move of almost 11%. So we're up 11% in November, but wait, the sell-off we've had is about 3%, so we're still net up about 8%. So you guys have to realize the market doesn't go up, up, up and away all the time. It's healthy to see pull downs, and that's what we're seeing right now. And another thing worth noting is, hey, this could be a head and shoulder. I've said this before on Friday's video. I'll say it again now. This could be a head and shoulder on SPX, right? Left shoulder, head here, neckline at 35.85. And especially if we break 35.40, 35.45, we might fill the gap down to 35.15, and that could be where if we break that even, we might go even lower to 34.60, right? So watch that head and shoulder here, and if we go over here to SPY, which is an ETF that tracks the S&P, you can see neckline is at about 358, left shoulder here, head formed to about 363, and then the right shoulder's forming under 358, and especially if we break 353, 354, that is where we could complete maybe this little head and shoulder we're seeing if we gap down to maybe 351. So on SPY, watch 351.80, 352 as support. 353 is another big level. 358 to the upside as resistance is big on SPY. And let's say we break 358, 363 to about 366 are going to be the other couple of resistance points to watch out for. So overall, guys, markets are seeing a bit of a sell-off, but again, that's very healthy. And typically we would be talking about the futures in this video because every Sunday I typically go over the futures, but in this case, I can't. I'm actually filming this video a bit early today at 1 p.m. Eastern Standard. The futures markets open at 6. So what you guys have to do, and I will be definitely doing this as well, I'm going to be looking at the futures after 6 to see where the sentiment overall is heading into tomorrow, right? Let's say, for example, the futures are tanking at 6 and heading into tomorrow here and into the pre-market session. That's not going to be good for the bulls, obviously, right? That could mean, hey, we might be selling off and the right shoulder could be completing here in the S&P 500. But if the futures are gapping up, they're green heavily, and we're seeing pre-market tomorrow, large caps are green, futures are green, it could be the opposite. We might be going higher. So watch out for the futures. And by the way, guys, the futures are ES, the E-mini S&P 500 index. We also have /NQ, the NASDAQ 100 index futures, and /YM, which is the mini Dow Jones Industrial Average futures. So keep an eye on those. Very, very important. Now, let's get into the top 12 stocks that I'm watching right now heading into this week that I'm looking to buy. I'm very interested in these. Number 1, we have FedEx. And FedEx has been crushing it, no doubt about it. On the 4-hour chart, what we can see here is a very good stock performance, right? From $88 back in March, hit almost $300. So that's a nice, 3x pretty much, right? From 88 to 290. And ever since then, we've been selling off a bit, seeing a bit of a top on FedEx. But what we just did the past week of trading, we actually broke out. What you guys can see here on the 4-hour chart is we were trading into this wedge. You guys can see it, right? We were making lower highs at the same time as we were making higher lows. And then we saw a massive squeeze up on the 16th. I think that was last Monday, right? Yeah, 16th. We saw a massive squeeze out of that wedge resistance, and we went from 270 all the way to about 282 after hours that day. So that is where the momentum shift from, okay, we're selling off to now we're breaking out of the wedge. And ever since then, I've been pretty interested in FedEx, right? I've been seeing the momentum shift. And now what we saw last week is, okay, we broke out 282, we went up to 290, and we failed at 290, which was that resistance from late October and in the beginning of November. So we failed at 290, and then we went down to about 277, 280-ish, right where that 50 SMA is here on the 4-hour chart, and right where that old resistance is from a couple weeks ago at 277. So I'm thinking, okay, FedEx is able to hold 277, 288. What we can get here is a continuation of this uptrend, a continuation of this momentum shift, of this breakout, to the point where, hey, maybe from 277, we're able to get back up to 288, which gives this about a $10 profit potential, right? From 277 to 288, that's about 4% that we can get from FedEx. And mind you guys, we might actually break out of 290 on this. This is actually an ascending triangle as well, right? Resistance 290. We're uptrending into that resistance. So if we even break out of 290, hey, this thing could be going 300. So I think 277 and 288 is nice into 290. And if 293, 290 breaks, hey, 300 could be the next target. So FedEx, I'm loving this these technicals here for this week. Another one that's looking like an ascending triangle breakout on this 4-hour chart is Square, right? And we've been calling this one out. I traded it last week, right? I locked in profits. And Square, this one ended up filling the gap nicely from 181 to 190. We broke 190, which I was talking about last week, right? If we do that, I was saying we're likely to fill up to 200, right? We broke 190. Now we're at 195. I think we're going straight to 200, which gives Square about $9 to $10 of profit potential, also which equates over to 3.5% profit potential, right? And I think anywhere above 192 to 195, that general area, could be a nice entry point here for Square. And ultimately, guys, you might think I'm crazy, but you might not. You might agree with me. I think Square is going over 205. I don't know if it's going to happen this week, next week, a month from now, 5 months from now. Overall, all I'm saying is, hey, I think it's going over 204, 205. This is looking very bullish, right? Ascending triangle is it's playing out. So, hey, we might be going over 205. And by the way, guys, always do your own research, your own due diligence. Please don't buy any stocks based on my opinion, because it's my opinion, right? And this is what I think out there in the stock market, since it is the Stas Surface YouTube channel, right, guys? So next one, NNDM. And I'm not the biggest fan, and you guys probably know this if you've been following my videos. I don't really trade a lot of small price stocks, small cap stocks in the dollar levels. I mean, all the stocks I talk about, most of them, they're in the billions of dollars of market cap. But today, I wanted to talk a little bit about NNDM, which is an interesting one here. And I'm not sure which ARK active ETF owns this, but I think one or two of them actually own NNDM. And let me know in the comments if you guys know which ones they are. They're slipping the top of my head right now, but NNDM went down 25% on Friday, guys. No joke. It lost $1.43. And this is kind of, on a little side note, this is kind of why I don't really like dealing with the smaller price stocks, the smaller cap stocks, because they're prone to moves like this where they can go down 30%. And on the flip side, they could go up 30%. But anyway, we're going to talk about it here today. And what we saw is 24% down after we just hit on this 4-hour chart a higher high in the uptrend, right? So we were uptrending nicely. We were making higher highs, higher lows, all that good stuff. We broke out of the high from back in the middle of October at about 580. We hit about 640. And then we got news that they're doing NNDM a $100 million direct offering of 25 million shares at $4 per share. And what does that do, right? When they're putting shares out there, what does that do? Guess what, guys? It devalues the current shares, which is why that 24% drop occurred. And who knows? I mean, at this point, we are holding this 50 SMA on the 4-hour chart at a higher low, which we've held multiple times in the past. So we might be able to see a bounce out of this 440, 450 level of resistance, and maybe we can make a play back up into the $5. But again, with this share offering, we might see a steady decline, maybe to $4. Maybe we consolidate a bit at $4, which then again, that could be a nice entry point. But what you guys have to realize is that would be under the 50 SMA. So that's going to be interesting to see how it plays out, technically speaking, right? But either way, this is one worth watching on this massive dip. And if we get to $4, it'd be even more than a 24% drop. It'll be something like a 35% drop. So yeah, I'm watching NNDM here. Overall, it's had amazing momentum ever since $1.40. It's been going bananas. So any dip here is worth watching. Although I'm very, very aware it could go lower, maybe $3.80, $4. And hey, maybe there it could be good to pick up as well. But again, do your own research as always. And on to the next stock is Workhorse Group, guys, which has been a crazy play, guys. Oh my goodness, right? It's been quite the horse, no pun intended. It went up 13% on Friday, up $3 on the day. And we've been filling gap after gap after gap, breaking resistance after resistance after resistance. And we said last week, I called it out, if 22 breaks, we hold 22. It's likely to go to 25. And I didn't think it was going to go to 25 that quick. But then again, I'm not too surprised because Workhorse is that type of stock that could move 20% in a day. And it's just that type of stock. So we filled the gap to 25, broke 25. Now we're holding it as support. We closed above 25 here on Friday. And I know it sounds crazy, but I think we could be heading to over $28 per share, $28.30 to be exact. Maybe not this week. Maybe we see a bit of a pull down week, which would be healthy. Like I always say, guys, pull downs are healthy. But I don't know. Maybe the week after. We'll have to see. And overall, I think 28.30 is the target. If 25.30 holds, maybe we fill the gap there directly, or maybe we see a pull down from 25.30. It cools off a bit. Healthy pull down again, like I said, maybe from 25 down to about 23, and then it rips up to 28. We'll see how it goes down. But you guys can see 28 has been a resistance from the end of September here. and in the middle towards the beginning of October, where we initially thought USPS was going to announce the contract, but then they pushed it back, which is what caused Workhorse to go from 30 down to about 15. And now that they're, the date's coming closer and closer and closer, when they said they were going to, announce it after they pushed it back, they said they're going to announce it at some point in December. Now that the date's coming closer, people in Workhorse, investors, traders, they're getting more antsy. They're getting more FOMO-y, just in case this contract does end up coming out. So that's why we're seeing the steady climb back on Workhorse. But one big risk with Workhorse is, what if the contract doesn't go to Workhorse at all? That's the biggest risk here. And you guys have to understand that, right? Imagine that. The stock went from 28 to about 15 on the contract simply being pushed back. What if the contract just never happened for Workhorse? I think the stock could go much lower, and you guys have to understand that when you're investing, when you're trading Workhorse, and I personally have a position in Workhorse, and I'm fully aware of that, right? So that is WKHS. Another one here is Tattooed Chef, which I haven't mentioned on this channel at all. This is the first time we're talking about Tattooed Chef, and this is in an industry that's up and coming. It's been around, but it's growing even more today's day and age, which is the plant-based foods, right? You have Beyond Meat, Tattooed Chef, a bunch of other ones, right? And this one's just been beaten down. It's down about 40 to 50% from where it peaked at about 28.60, 44% to be exact. And although the trend is not too attractive on this 4-hour, we're still downtrending. We just took out lows last week at 1650. We closed at 1580. Although that's not too attractive, I'm personally still watching it closely here for when it does end up confirming, if it does end up confirming that technical upbreak. And honestly, let me draw out some lines here. Where would that be? Well, I think we need to break out of 1860. 1860 is a big level of resistance from the middle of June and from the end of August here. After, take a look. The second we broke 1860, in August, it took off to $28. So for me to get into Tattooed Chef, let me pull up this 20-day chart. Actually, let's go to that 90-day chart. That should give a bigger picture. We need to break this downtrend right here, the 50 and the 180 SMA on the 90-day chart. If that breaks, and we break 1860, this could be off to the races, right? So I'm not getting antsy with it quite yet, trying to jump the gun out of position because I know it could go lower, right? It could end up going back to the $12, $13 range, and that's the last thing I want to get caught in. So we're going to wait for the uptrend, right? We're going to wait for that breakout on Tattooed Chef. And Run here, Sun Run's another one that's been slowly reversing. Momentum is shifting back in the favor of the bulls. We ended up breaking 55 last week, 56. Filled the gap up to 59, and then we broke 59 and filled the gap all the way up pretty much to what? Where do we get to? Almost $63, $64 per share. We filled the gap all the way pretty much to that high from back on the 9th of this month. So similar to Tattoo Chef, right? Not exactly the same, but similar kind of. We're seeing a slow breakout here on Run, but we're still in the downtrend pretty much, right? So we want to wait for confirmation, and to wait for confirmation, we're going to need to wait for a break above $64. I think $64, roughly 63, 64, which is again where we topped at the 9th, on the 9th of this month, and back in September twice. That needs to break. I think if 64, 65 we can get in there, I think Run could be in the breakout category. It's almost there. But yeah, 65 needs to break there on Run, and I think we could get back into the low 70s, mid 70s if that does end up happening. Another one here is good old DraftKings, guys, DKNG, which, like I've said, I'll say it again, if I had a time machine, I would go back and buy DraftKings, guys, back at this peak. But what thrill is that? What thrill does that give you if you had a time machine? It doesn't give you a thrill because you know what's going to happen. What fun is that? I would not want to do that. As crazy as that sounds, I'd rather just play the market the way that it is without knowing what's going to happen. But for fun, if I could go back, once, hey, I would have bought some DraftKings at 35. And let me know down below, guys, in the comments, if you had a time machine, what stock would you buy? A lot of you would probably pick Amazon, Apple, back when they were penny stocks, and hey, I probably would do that too. But anyway, DraftKings, we're seeing a nice breakout above $45 here. Didn't fill the gap to 55, which I'm thankful for because I want to get in on this dip here. And we're slowly seeing a dip. I mean, it went down 2.2% on Friday, down $1.09, and I think we could go even lower, maybe $46. I think if 46, 46.50 can hold, if we do something like this where we sell off, we hold 46, right, and then maybe we pop off that low as a higher low, I think that could be an entry here on DKNG for ultimately a move back into the mid-50s. I think that is where we're heading over time, and this is a nice slow reversal, a nice shift of momentum into the Bulls' favor that we're seeing. So yeah, I'm bullish DKNG, no doubt about it. Anywhere mid-40s is an entry, up to about 55 in my personal opinion. So yeah, DKNG I'm watching, and now some stay-at-home stocks I'm always watching in these scenarios and situations that we're living in these days. Guys, I'm watching Zoom, and this is one that we've been looking at heavily here over the past couple of videos ever since it's been getting squashed, because I've been on the channel saying that, hey, I don't think that the stay-at-home trade is dead. I mean, we're seeing all-time highs in the CV cases and unfortunately in casualties as well, and we're seeing closures around the country in different states. Schools are shutting down. New York just shut down schools. I'm in New Jersey. I'm witnessing schools around me shut down, right? And people going home, and, you know, they're doing more online stuff, which Zoom is in the direct, beneficiary of, right? And we're seeing businesses still closing. We're seeing universities. It's all just continuing to shut down. And yeah, we're going to get a V-shot eventually, but in the short term, until we get that V-shot, I think the stay-at-home trade is it's heating back up. Let's just put it that way, right? And Zoom has been crushing it. On Friday, it went up 6%. It filled the gap up to 440, right? And now, if we break 440, which I think is going to happen this week, and again, I could be wrong. I'm not a genie. I don't have a crystal ball, but I think if 440 breaks, 460 is where we're going. That's a $20 pot. That could be around a 5% move, and I honestly don't think it's going to be done there. If I were to be a fortune teller, right? If I looked into the future, I think we could get back over $500 per share with Zoom. Above 460, we're going to face a tough resistance at the 180 simple moving average here on the 4-hour chart. And in general, we've struggled before right around that 475 level, right where that 180 SMA is. So I think 460, if that breaks, 475, if that breaks, we're going to get a straight shot back over $500. And again, with the fundamentals right now, the closures, the rise in the CV, I think Zoom's going to do well in the short term, and I'm sure a lot of you guys will agree with me on there. Another one is Shopify, SHOP. And by the way, if you guys disagree with me on anything, please leave a comment. I don't like a bunch of yes men, right? I like people that combat what I'm saying and go against it, because I can learn from your perspective. I don't like people that just agree with everything that everybody says, right? I like hearing the contrarian, that's the right word, right? The contrarian point of view. What's your point of view? Let me know down below in the comments. And Shopify is another one. SHOP found a nice bottom last week at about 890, 900, bounced back now, back into the mid to high 900s. And this is another one that is a good stay-at-home trade. It's been consolidating for a couple months between 1050 and about 870. Now we're making our way back up to 1050, and I think the train still has some road or some runway to go. Let's put it that way, right? I think there's still upside to about 1050 from 980, which gives it about 7%, or rather $70, either or, upside from where it is right now. And I think 1050 might even break, and we could could fill the gap back over 1100 eventually here on Shopify. And another one is TDOC, also known as good old TeleDoc Health, which is in a nice downtrend right here, downtrending channel on the 4-hour chart. You guys can see it, right? We hit 250, bottomed at 190, popped back up 230. Now we recently just hit 170, right? We broke the previous supports. We hit a lower low, and now we're trying to make our way back up to the resistance of this channel, which is going to test anywhere from 210 to about 215, and that is where I'm looking for a potential breakout, right? If 210, 215 can break the resistance of this channel on the 4-hour chart, I think TeleDoc could be making its way back up to the 240s, 250s, and it could also maybe get rejected at this 210, 215 level, and we could end up shorting it, maybe playing a put options, from 210 back down to the high 180s, or maybe 175, 185. We'll see how that goes down. But those are some thoughts there on TDOC. Watch this 4-hour, downtrending channel. That's very, very important here. And a couple other ones here, guys. We have FSLY, ticker symbol FSLY, up 3.4% on Friday. This is very similar to RUN and to, what is the other one? RUN and what was it? TTCF, Tattooed Chef, right? It's still kind of downtrending on this 4-hour chart, but we're at a breakout point. We're at a point where we could really shift momentum. And FSLY's been shifting momentum slowly ever since the beginning of November, but it's still, again, overall under a big resistance point. So I think if 87 breaks this 180 SMA on this 4-hour chart as well, that is where we might see a nice gap fill up, maybe 16%, 17% upside, up to $100 per share. That's where I think FSLY could be heading here on the technical breakout from $87 to $88 on this 4-hour chart. So FSLY is a momentum play, especially if we get out of those resistance points. And another one here, stay-at-home play, is Netflix, up 0.75% on Friday, up almost $4 per share. With last week's price action, we've been holding $4.75 nicely as support, which needs to hold considering we've held that in the past couple of months multiple times, stemming back from the middle towards the end of July. So if $4.70 holds here, which it is, I think there's upside to the $5.05, $5.10 level on Netflix, and even above that. I think we could break $5.10 eventually and get back, let's say, to the mid-500s eventually here on Netflix. So, guys, those are the 12 stocks that I have listed here. We could talk a lot more. Let's just do some bonus ones. Why not? Off the top of my head here, we have NEO. NEO's looking like it's poised at this point for more upside. We had a nice pop on Thursday. We ended up holding 45, 44 as support, which I was looking at heavily right after the earnings report. So we didn't break 43, 44. We didn't get a gap down to 40. We actually popped. So that's very bullish. I'm thinking NEO, as crazy as it sounds, it could be taking out 50 this week. So watch out for NEO. Another one that I'm thinking of here is Disney. I haven't looked at Disney in a while. Watch Disney, guys. Take a look. It's down about $6-7 off the highs here. We're holding overall the 50 SMA on the 4-hour chart. This could very well be a dip buy here on Disney. And although Disney's struggling a lot right now with the CV, the parks, and so forth, the stock still might do well if we get news of good streaming service numbers and how the streaming services are doing, because we know they're shifting now, not completely away from parks, obviously, because that's the bread and butter, but they're actually looking to beef up the streaming business, as they should, right? Because they need to compete with Netflix and all the other players out there. So watch out for the growth in the streaming business. That could be very beneficial here for Disney stock price. So we'll just leave it at that. Hope you all enjoyed today's video. If you all did, hit that like button for me, subscribe to the channel, and don't forget to join the Strive Smart Discord chat. It is free. Same with the Facebook group. And you guys can get 4 free stocks from WeBull valued up to $1,600, which does end off. It ends here on what, the 30th of November, in a couple days here. So make sure to use my link, deposit $100, and get your 4 free stocks. So I'll catch you all in the next video. Thanks for watching as always. Be safe out there. Good luck in the markets this week. It's going to be a good one. Peace out.